Welcome to Investero. When it comes to building long-term wealth, one of the most important factors is not just what you invest in, but how you organize and balance your investments. This is where portfolio strategies come into play. A well-structured investment portfolio allows you to grow your money while managing risks and adapting to different market conditions. In 2025, with rapid changes in technology, inflation concerns, and shifting global economies, having the right portfolio strategy is more important than ever. The first key principle of any portfolio strategy is diversification. Diversification means spreading your money across different types of assets, so you're not overly dependent on the performance of just one investment. For example, a portfolio made up only of tech stocks might deliver huge gains in 1 year, but it could also crash if that sector takes a hit. On the other hand, if you combine stocks with bonds, real estate, commodities, and even a small portion of cryptocurrency, your portfolio has a balance of risk and reward. This way, when one asset class is down, another might be up, helping you smooth out returns over time. There are several strategies investors can use depending on their goals and risk tolerance. One of the most popular is the growth strategy. This focuses heavily on equities, especially companies with strong earnings potential and sectors that are expanding, such as artificial intelligence, renewable energy, biotech, and financial technology. Growth portfolios tend to be riskier, but can offer high long-term returns, making them ideal for younger investors who have time to recover from market downturns. Another approach is the income strategy. Instead of chasing high growth, this strategy prioritizes steady cash flow. Investors focus on dividend-paying stocks, bonds, and real estate investment trusts. The goal is to generate consistent passive income, which can either be reinvested to grow wealth faster or used to support living expenses. Income portfolios are often attractive for retirees or people who want financial stability without taking on too much risk. Then there's the balance strategy, which mixes growth and income. A balanced portfolio might include 60% stocks and 40% bonds, or another ratio depending on your needs. The purpose is to capture some of the high returns from equities, while maintaining the stability of fixed income securities. This strategy works well for investors who want long-term growth, but also care about protecting their wealth during economic downturns. Another important portfolio strategy is asset allocation based on risk tolerance and age. A general rule is that younger investors can afford to take more risks, since they have decades ahead to recover from losses, while older investors should protect their wealth by shifting into safer investments. For example, a 25-year-old might have 80% in stocks, 10% in bonds, and 10% in crypto or commodities. Meanwhile, a 55-year-old might prefer 50% stocks, 40% bonds, and 10% in alternative assets. In addition to these traditional strategies, modern investors in 2025 are also looking into thematic investing. This involves building a portfolio around future trends like artificial intelligence, clean energy, space exploration, or blockchain technology. While thematic investing can be exciting and highly profitable if the trend grows, it should still be balanced with more stable assets to avoid excessive risk. Another powerful approach is dollar-cost averaging. Instead of trying to time the market, you invest a fixed amount regularly, for example every month, into your chosen assets. Over time, this strategy helps reduce the impact of market volatility, because you rebind both when prices are high and when they are low, averaging out your cost. It's one of the simplest yet most effective ways to grow wealth steadily. Risk management also plays a huge role in portfolio strategy. Setting stop losses, keeping emergency savings, and ensuring no single investment makes up too much of your portfolio are all ways to protect yourself. Many experts recommend not having more than 5 to 10% of your portfolio in any single stock or alternative asset. This ensures that if one investment fails, it won't destroy your entire financial plan. Rebalancing is another crucial part of portfolio management. Over time, some assets in your portfolio may grow faster than others, changing your original allocation. For example, if your stocks perform well, they might grow from 60% of your portfolio to 75%. While this sounds good, it also means your risk has increased. Rebalancing by selling a portion of stocks and reinvesting into bonds or other assets brings your portfolio back in line with your strategy. Ultimately, the best portfolio strategy depends on your personal goals, whether you want aggressive growth, steady income, or long-term stability. The smartest investors in 2025 are those who combine different approaches, stay disciplined, and avoid emotional decisions. Market conditions will always change, but a well-planned and diversified portfolio will help you stay on track regardless of short-term ups and downs. Building wealth isn't about chasing the hottest trend, it's about creating a strong foundation that works for you over time. By understanding diversification, risk tolerance, asset allocation, and rebalancing, you can design a portfolio that grows steadily while protecting your financial future, no matter where you start. Having the right portfolio strategy can be the difference between financial uncertainty and financial freedom. Subscribe to invest